Hello, it's October 23rd. My last call said if we gapped over Thursday's high, that would be what would be required for the rally to continue. Futures were already up sharply, so that really wasn't much of a call. On Friday, we had two signals from MEJT, both at the same time. There was a buy signal and an ultimate buy. The W means the rally was likely to be weak. We got the rally and we stalled in the MEJT resistance area from earlier in the day, and I've got no new MEJT signals, which forces me to rely on other things. Well, you'll recall on Wednesday I said all we had to do to continue a big drop was to go under Wednesday's close and Wednesday's low, and that never happened. Instead, we had this wall and a hole in the wall, a gap. Now, this is not a sustainable formation, and at some point the gap fills and we undercut the wall. Usually you don't have to wait long, but usually and always aren't the same thing. So we have to see if there's anything else which gives us a chance of filling that gap pretty soon. Well, we had a gap up, hit a new high here, and couldn't close over either of them. That's a negative pattern unless we gap up and promptly take out this high. It would be very negative indeed if we were to gap under this low, and based on somebody else's work, I think if we don't have a gap up and take out these highs, I think we are going to have a gap down and take out this low. Notice that this is a stilt. Here's half a diamond, which is all you need. So if we have a gap down, it could easily be a right stilt targeting the origin of the left stilt. Of course, we're going to need some more evidence that that's a possibility, and as it turns out, we do have it. Here was a buy signal on the half-a-day chart. We had a 9-13-9 to mark sequential buy signal right at the low. We had a different 9 bars of setup here, which didn't go to completion, but now we have 9 bars of setup in the other direction. Watch this yellow line here. 9 bars of setup in the other direction. We have 13 of countdown, so we now have a sequential sell signal on the half-a-day chart. We have 1 bar to go to get a combo sell signal on the same chart, but these things don't have to go to completion. This is enough. This is the TDST line from the pattern back in August, right here. Strong rallies tend to take out the prior TDST line, so the fact that we've gotten a sell signal without taking out the line means one should not look for further strength if the signal pans out. Of course, if it fails in grand style. In alignment with that, here's a 15-minute chart. We have a 9-13-9 sequential sell. The green letters are the combo. Here's 10 bars. The last 3 don't have to obey all the rules. If you change the rules to make them go higher than number 9, you'll see we have 10, 11, make that 11, 12, and 13 finishing early. So we have combo and sequential sell signals on the 15-minute chart. Here's a 130-minute chart, and we have 78.6% Fibonacci resistance here, but there's a lot more resistance than that. If you connect these two highs, you'll see that the breakout over these highs did not meet the marked sustainability criteria. all that's required is that we return to that trend line, which we did. It doesn't have to go any further than that, but it means that the break doesn't have to be the real thing. Here's a 200-day moving average. I've been negative on the market, and a gap over the 200-day moving average goes against that. But if we were to gap down Monday and to undercut our low here, that would negate this up move. If you look at this low in the breakdown power here and draw a trend line, you will see that we have come right up to that trend line. Now, calling this point a significant point is somewhat arbitrary, I admit it, but it's an important point to me. You could also have picked this point, I suppose, and we haven't hit anything significant, but I have a rule that says a straight line break of a sloping trend line requires a retest of that line, and we have a retest of that line right at the high. If I'm correct about this being a rally in a long-term bear market, we have all we need for a gap down Monday and a stilt-like move under this low into the origin of the left stilt. I think that's not the required continuation, but I think it's a very likely one. And that's what I'm hoping to see Monday. If instead we have a gap up Monday, because of the demarked cells, I expect to see a reversal before long, but I'm hoping we see a stilt-like move down at Monday's open, and that is today's call.